Boris Schlossberg, Managing Director at BK Asset Management.
BK Asset Management's Kathy Lien.
Boris Schloss.
Hello. Good morning, everyone. This is Kathy. If you can see my screen, you see me, hear my voice, type in yes into the Ask Kathy into the chat box. Let me know that you can see me, you can hear me. You can see the beautiful pool behind me. I am definitely not in my office in New York. Good morning. Good morning, and Grace. Good morning, David. Good morning, Park. Welcome, everyone. Yes, new location. Although you can see I'm wearing my sweater right now. I'm in Florida, but it's been quite warm. But this morning it's not. I mean, it's I think 60 degrees, which is warm compared to New York, but it's definitely not warm to be in that beautiful swimming pool behind me. Although if you had followed me on X, you will know that I posted a nice little pic from the Gulf of America yesterday. So that was very interesting. Although it was very, very windy, and I've never experienced so much salt in the air as I had that day. That I was literally choking and coughing the whole time. So I am streaming from a different location. So as you can imagine, I don't have my computer with me. It'll be a little awkward. I apologize for that because I'm not easily switching between my computers. I know Boris is with us this morning. And Boris, I'm going to have to rely on you to read any questions out because I only have one screen. So therefore, it'll be a little harder for me to flip back and forth. Give me a thumbs up, Boris, if you can hear me. And let me know. Okay, good. So he's gonna, come on when we go to questions. I won't be able to talk to it as much because I am only on one screen, but we will do the best we can. But good morning, everyone. And I'm glad everyone's joined us. It's a holiday in the US and it's a holiday in Canada. So as you have probably seen from the price action in the markets, things are quieter. We don't have any big moves in the markets. And we're basically, let me just take a quick peek before I share my screen to make sure that I'm saying the right thing. Basically, although the yen pairs seem to be moving quite a bit, but for the most part, it seems like the dollar is mixed. The US dollar is lower against the Japanese yen, but higher against the euro and higher against the Swiss franc. Last week, so for the most part, I would say that dollar is mixed. Last week, we had quite a bit of U.S. data. You had U.S. inflation, U.S. retail sales numbers, lots of U.S. data. And for the most part, the U.S. data basically told us that, consumer spending is slowing. And, there's a possibility of even greater contraction in consumer spending growth in this month, next month, because of all the layoffs and the higher prices. That could legitimately make Americans more frugal and, definitely cut back on any extra spending that they didn't necessarily have. So what we have seen is that the Fed Fund futures have shown that the market is pricing in a June to July interest rate cut by the Federal Reserve. Now, we do this every week. If you remember, every week we talk about what's expected by the Federal Reserve. And if you joined me enough times, you will know that that changes quite a bit, right, my friends? That can change week to week, depending upon how data is fared. And also gives you a clue to see that the experts don't really have it right. They really don't have the huge they're not right in terms of big views either, because they're changing their minds all very often. So at the beginning of last week, the Federal Reserve the market was pricing in a end of Q4 kind of November, December interest rate cut from the Federal Reserve. It was barely pricing in one rate cut by the end of the year. Now, the market is pricing in an interest rate cut by July. So, that is different. And it reflects how the market believes there is a greater chance of deterioration in U.S. data. And I don't blame them because, I'm down here in Florida. We talked a lot about egg prices. And I actually posted, let me see if I can share my screen here. Just give me 1 second. And as I said, it's going to be awkward because you're going to be seeing the StreamYard screen as well. But but give me 1 second to pull it up, and then I will show you exactly what I want to talk about. Okay, here, let me share my screen. Where is my screen? Add to stage. All right, so now I see this weird thing. So now you should see my picture of eggs. Can you see this? If you can see my pictures of my eggs, give me a thumbs up. I'm actually looking at my phone chat box. So I'm just going to see if there's thumbs up. This is a real picture that I took Friday night. I was completely shocked. I mean, this is the egg aisle in Florida. Now, this is at Walmart. So as you can imagine, Walmart probably has some of the best prices. So Walmart has some of the best prices. And this is showing you that at Walmart, which, you know, probably has the best prices, the egg aisle is completely empty. So we talked, and I've tweeted about how, you know, a lot of restaurants are adding egg price surcharges. And this is how severe the situation is. In the Walmart aisle of just your local in Florida, there's, I don't know, like 5 or 6 containers of eggs, which are opened, which probably means that there's cracked eggs in them. And so this shows you the dire situation of prices, the impact.
Hey, Kay, I heard a funny story on the egg story. So Ukraine has an egg surplus, apparently, because they've just got a ton of chickens and eggs at this point, none of them infected. So one of the funny commentaries about the settlement of the Ukraine war was that Ukraine would ship us eggs if we would ship them more material. That was a suggestion.
I mean, it's true. Many other countries are surplus of eggs. You know, some of my followers are saying we've got plenty of eggs for very good prices in Taiwan. But you know what? With the tariffs, you know, it's not probably going to net out the same cost anyway. So the situation is dire. My point is that this is a reflection of the U.S. economy. This is a reflection of anxiety, perhaps. You know, Americans rushing to find the best prices and if they're buying all the Walmart eggs and not wanting to pay higher prices at Whole Foods, for example, they're probably cutting back. And that is something I think we need to be mindful of as we look at how the U.S. economy could move in the coming months. Now, I've got my heat map here. And this heat map, you know, for BK Trader members, and I share it with you on Mondays, reflects my overall views in the markets. And this week, today's a bank holiday in the US, and it's also a bank holiday in Canada. So we don't have much going on. But, and also, I believe someone asked earlier, why did gold prices fall so much on Friday? Let me answer that, Fred, before I forget that question. So on Friday, I believe the day's kind of blurred. We had the announcement of reciprocal tariffs on Fridays, this Friday. And many people were surprised the dollar dropped on the back of the reciprocal tariff announcement. And the reason for that is because the reciprocal tariffs were announced. And then it was said that April 2nd is probably the day that we would get more details, or they would start, you know, that would be when the target date is for reciprocal tariffs. So from now until then is a long period of time. And the fact that it wasn't happening imminently in the next month at most, the market saw as another negotiation ploy by President Trump. And so they were relieved that it wasn't happening imminently, and that there were some specifics, but not real specifics, because they said that Trump said that he would leave it to Lutnick to figure out the details. He had some specifics saying basically, we'll charge them what they charge us, but, you know, that can be changed. I mean, it could be like a subset of things. It could be a lot of things that can be interpreted many different ways. So the market saw it as a relief. And so they drove the US dollar lower. And gold, normally you would think would rise when the dollar fall. But the market saw this as a bit of a relief. And that led to gold prices falling. And then, as Boris pointed out, you know, there's been progress made in the whole possibility of the Ukraine war ending. That's also an improvement in geopolitical situation, which is bearish for gold as well. So hopefully that makes sense. Another mutant makes such a fabulous point. I was talking to someone this weekend who said that, you know, people think about steel and aluminum tariffs, and it doesn't really resonate. The average person, it doesn't really resonate what this really means, but it will impact, you know, a lot of production. It impacts aluminum foil. the cost of aluminum foil will go up. It impacts, construction and vehicles, two of the biggest household budget items. So yes, higher inflation, more risk to consumer spending as a result of higher prices is ahead, in my opinion. And that's a serious risk. Now, of course, for the market, for the Fed, this is all speculation. And we have a strong feeling that's going to happen, but they have told us, and in many ways rightfully so, they are data dependent. So they got to see it in the data before it happens, because we've been talking about labor market weakness for a very long time. And there's been, up until last month, very little labor market weakness. So we need to see it in the numbers. Maybe we'll see it in the numbers next month, but we haven't seen it in the numbers yet. So this week is less of a focus on the dollar. We have very little market moving U.S. data with the Fed minutes in the middle of the week, which, is interesting. But we know, for the most part, the Fed left interest rates unchanged, and there's no immediate rush to lower interest rates again. That's probably what the Fed minutes is going to tell us. And, I think reciprocal tariffs have the threat of reciprocal tariffs have been announced. A lot of the other tariff threats have been announced. I think we may get a reprieve, a break from any tariff-related headlines. I hope we'll get a break from any tariff-related headlines this week. And yes, enough politics, please, right? I'm hoping that this week will not be about politics. I'm hoping that a lot of that will be more of a sidestep. And I hope that it will be more of a focus on data. And because we don't have much data this week for the dollar, the one big piece of data, which is the FOMC minutes, is probably going to be dollar neutral to slightly dollar positive. We also have no less than 9 Federal Reserve presidents speaking this week. I don't think they're really going to say anything all that different from Powell, which, really legitimately so. And I agree with, his stance is that everything needs to be based upon the data right now, because we can guess what's going to happen, but we don't know what's happened. And so they really need to be in data wait and see mode right now. So for all of those reasons, I think that we may, and the dollar has had a very nice run, we may get a little bit of a pullback in the dollar this week. This could be a week where the dollar pulls back a little bit more because we have hopefully less tariff-related headlines. And we don't have much in the way of U.S. data. We don't have non-farm payrolls, retail sales, inflation. All of that is behind us already. So that will allow us to focus on the economy and the data. So that's why I'm neutral, bearish U.S. dollars. Now, this week, we have a little less. The focus will be on the 2 interest rate decisions, Reserve Bank of Australia and the Reserve Bank of New Zealand, along with data from the UK and Canada and Japan, which we already got a little bit above. That's really the focus. Now, both the RBA and the RBNZ are expected to cut interest rates. And this is a really big deal because, and I think that the RBA rate decision is in many ways, while it's probably expected, it's probably the most important event of the week because they are expected to deliver their first interest rate cut in the cycle. All last year, they did not change interest rates. Them and the Bank of Japan were pretty much the most hawkish central banks, leading to strength in Aussie. But, since the beginning of the year, Aussie has weakened. So the market believes that the RBA is going to cut interest rates by 25 basis points. So let's take a look. I love to build these tables. Let's go to this one first. And let me hide this behind the other one so we can focus. Now we'll bring it back up. And let me make this bigger so everyone can see. All right. So every central bank meeting, I like to build these tables. And what these tables do is they basically put us into the shoes of the central bank to basically think like the central bank. So the market expects is an 85% chance priced in of a 25 basis point interest rate cut from the RBA. So if you were the RBA, taking a look at this, what should you do? Well, first off, at first glance, without even digging into it, it looks like there's just as much green as there's red. And that suggests that there's been just as much improvement as deterioration. And there's quite a bit of neutral too, which means that things haven't changed that much. as we dissect this, we can see from the first part, consumer spending in December contracted, but overall it's pretty firm. Consumer confidence is down a little bit. Labor market activity has been pretty good, although, and in general, it's been pretty good. Although last month we did see full-time job losses. Inflation is still, hot in some ways. Fourth quarter, inflationary pressures eased. But in February, which is right now, which is the most recent data, inflation expectations skyrocketed because Australians think prices are going to rise as well. Housing market's doing well. The activity indicators, leading indicators, business confidence is down, but manufacturing, services, and composite PMI has improved. GDP has improved for China. Trade data for China has improved. And then some of the market indices have improved. So really, taking a look at this, in some ways you can argue that, yes, there's been some deterioration in the Australian economy, but not really enough, in my opinion, to justify an overly aggressive dovish stance. The only thing we could say is that there's definitely a slowdown in growth in China, and there's definitely a risk that the tariffs on China could pose for the Australian economy. So perhaps the RBA is preempting that and cutting interest rates now. So as traders, what should we think? Well, first off, this tells me that maybe they won't cut interest rates. Now, when the odds are so high in favor of it, 85%, I'm inclined to believe that they will cut interest rates. But what this tells me is that they're probably going to cut interest rates. And their stance, probably not going to cut interest rates and say, this is the beginning of an easing cycle, and then we're going to cut interest rates again next month. They're probably going to say, we're going to cut interest rates, and then maybe, we'll wait and see. So my point is that it may be a neutral cut. I don't want to say a hawkish cut, but maybe like a neutral cut, which may not be all that negative for the Australian dollar, which has already fallen quite a bit. And so if you imagine if they did something or said something to make it fall further, that would increase inflationary pressures more. But maybe they also want to weaken the currency a little bit to offset some of the higher costs abroad. So I think that there's a possibility of a neutral cut, but we'll see. There could be some forward-looking ideas that the RBA has that they maybe want to weaken the currency a little bit to affect the tariffs. The other rate decision we had is the RBNZ. So let me just expand this. So the Reserve Bank of New Zealand is expected to make a bigger move, a 50 basis point interest rate cut. So taking a look at this table, looks like a little bit more red than green, I think. But there's also quite a bit of green. Like this morning, Kiwi's up today because this morning, if you scooch to the middle of this, PMI services, that actually increased. So both service sector PMI and business PMI increased in the month of January. So both of those increased, showing improvement in New Zealand's economy in the month of January. Business confidence is up. So, these are important things. Service sector PMI, business confidence, all of those are up. Up here on top, starting on top. Retail sales is down in Q3. Not down as much as before, but down, so it's bullish neutral. Credit card spending for December, which are more recent releases, is down quite a bit. Consumer confidence is down. So, this is not good. The retail sector is definitely Kiwi bearish. Labor market activity, 2 quarters of negative of declines in jobs, and also the unemployment rate increasing. So this is also not good. I apologize. I should say Kiwi bearish. So both consumer and labor market are Kiwi bearish. Activity indicators are neutral, although I would say more neutral bullish. I just realized I didn't update the verdict. I think I just screenshotted it. But this should be neutral bullish. So activity is bullish, consumers bearish, labor market is bearish. Inflation is neutral. I mean, quarterly, we're down a little bit. Year over year, it's unchanged. Dairy prices are up, neutral. Housing market, bearish. All right. So yes, I think, even though activity indicators are improving, there's definitely a case for a rate cut by the RBNZ. And there's certainly a possibility of a 50 basis point rate cut by the RBNZ. But they could be nearing the end. Now, if it wasn't for all this political related uncertainty created by Trump tariffs, I would say that they're at the end of the rate cutting cycle because things have stabilized. They've been one of the more aggressive central banks at the beginning of the cycle last year to cut interest rates. They've done a lot of interest rate cuts. So if not for all this tariff uncertainty, I would say they were pretty much at the end. But we do have a lot of uncertainty. So I think they're going to either do 25 and say that, the door's open for further easing, or they'll do 50 and maybe start to drop their rate cut bias, both of which may not be all that bearish for Kiwi. We'll have to see if I'm right or not because, these two rate decisions are at an interesting juncture. But ultimately, I think that the guidance from both of these central banks, based upon how data has been performing, maybe not be as bearish as the market expects. But, they could be worried too. So these two rates, they could be worried about, some of the things we talked about. And so there'll be a lot of trading opportunities on the back of these rate decisions. I would definitely not be holding positions into the rate decisions. BK traders would never trade ahead of rate decisions. But once we get the rate decision and we know exactly what they do and say, we could have some very nice continuation moves in Kiwi and Aussie. And that's how I, as a trader, will be trading this. So we've got that for these two central banks. So for Euro, I'm bearish Euros. This week, we have less Eurozone data. We have the ZOO survey and we have the PMIs. PMIs are very, very important. And I think that, I don't know if activity is quite slowed right now for the Eurozone, but forward looking, I think the Eurozone has a lot to be concerned about. So I'm neutral bearish Euros. Remember, I'm neutral bearish dollars too. And one of the other things I want to point out, is I tweeted about this, is that there's been a lot of federal job layoffs. And so that could make the next non-farm payrolls report even uglier than this non-farm payrolls report, and the next two non-farm payrolls report even uglier. So that's another reason why I'm a little bit more bearish dollars than I'm bullish dollars. And by extension, if I'm bearish dollars, I can't be that bearish euros, right? Because, the pair is traded based upon euro and US dollar. But still, from a Eurozone economy perspective, I strongly believe that the PMIs, or, maybe not this month, but certainly next month, but just in general, the outlook for the Eurozone is not so great. They're next in the firing line for tariffs. Trump talked about, that being a tariff, which is crazy. But I'm neutral bearish is what I'm trying to say. Because from a data perspective, I'm bearish, but, I also think the dollar is going to fall. Sterling, we have a lot going on for the UK this week. We have inflation data, we have retail sales numbers, we have the PMI reports, we have a lot going on. I even think we have the jobs reports. We'll see that later in the calendar. So we have a lot going on for the UK. And this will be very important in deciding whether or not the Bank of England follows up with another interest rate cut at the next meeting. Right now, the market does not believe that the Bank of England will cut interest rates again in March. I'm a little skeptical about that. We'll have to see. And I think that a large part of that will depend upon this week's data, which are, in my opinion, mostly going to be weaker because according to the last PMIs, there was weakness in the labor market. There was job losses and things like that. We already talked about Aussie and the RBA. The Canadian dollar, I'm bullish Canadian dollars. I'm bullish Canadian dollars because the jobs report was hot. It was on fire. We have this week the inflation report and retail sales report. According to IVPMI, the price component of IVPMI, and I invite all of you, it's such an easy just, IVPMI Google search. And you can see that prices, even though IVPMI nosedived in January from 54.7 to 47.1, look at this over here. Prices jumped from 61.5 to 64.4. So prices are on the rise globally, including Canada. And I think that that is going to be reflected in the inflation report, which I think may end up being, if you get hotter inflation, you got hotter jobs, and hotter jobs could lead to hotter spending. That may end up being CAD bullish. And then I am also Kiwi bearish, although neutral bearish. We'll have to see how things go. But RBNZ, as I said, is cutting interest rates. And so, the prospect of rate cut is going to keep Kiwi under pressure until the RBNZ rate decision. We also have the Swiss franc, which I remain bearish. Swiss data has been pretty weak. There's not really much going on for Switzerland this week, so it really won't be about Switzerland at all. It'll be purely based upon the market's appetite for US dollars and the other currencies. Japan, I'm bullish. Japanese GDP data was very good. Someone pointed out at the beginning of the chat that the yen is rocking and rolling today. It's rocking and rolling because we had good GDP data. I think we have inflation data too later on in the week. And, the BOJ have told us that they aren't rushing to raise interest rates again. But we've been seeing consistent trend of stronger GDP, stronger household spending. We'll have to see how those inflation numbers fare because inflation has been a little different in Japan as it has been in the other places like Canada, for example, and the US. But still, I'm yen bullish for now. So yes, another point out, the yen pairs are on the move. So that's the data. Now let's take a look at the calendar. We're on this FOREX factory, and then we'll go to this week. Okay, so as I said earlier, I'm trying to make this bigger. Yeah, that should be a lot bigger. Let me see if I make it too big. Yeah, that's all right. It's not too bad. Okay, so PMI services from New Zealand was good. Visitor arrivals are up. And this is consistent with the PMI increase we saw in the manufacturing sector last week. So New Zealand data is improving, which is why I'm a little skeptical about the 50 basis point cut or 50 basis point and more. Because one of the things that you should learn is that it's not about what the central bank does. That's the most important. It's about what they say is coming next. That is most important. And so that's really what we're going to be keying into. Japanese GDP numbers, really good, 0.7%. Industrial production, not great. Market didn't care about that at all. Market does not care about Italian trade data. Eurozone trade balance was up, but the euro's down. It's not a market mover. U.S. Canada on holiday, so nothing really going on, although CAD housing starts was a little weaker. We have a lot of Federal Reserve officials speaking this week, as I mentioned earlier, and their comments will be key. But if you are just joining us now, I talked about how I don't think they're going to say anything that's any different from Powell, and that they're just going to be data dependent, and that there may be no rush to cut interest rates. RBA is tonight. So BK traders, we're not going to be trading Aussie. BK traders, I have to update. I'm not sure whether or not I'm going to trade tonight because of the holiday in the US, we don't usually trade Sunday, Monday because based upon a very long history of statistics, the Sunday, Monday open trade is basically a wash. Sometimes we make money, sometimes we lose money. It's not enough of a statistical edge. I like 70, 80% accuracy for us to trade it. And today is a holiday in the US, which makes tonight kind of like the Sunday. So we may not end up trading, especially since I'm looking at this now, and thinking about it more. RBA is after we usually put our trade on, and usually we'd love to trade Aussie and Kiwi, and that could be sensitive RBA. We may just revisit on Tuesday morning. UK jobs data, that's coming out. That's probably going to end up being weaker as well, more claimant count. But watch this. Average earnings is really going to be key for RBA. Governor Bailey speaking. We've got the German zoo. I think the German zoo is going to be weaker. I don't know how. Zoo is a measure of investor confidence. And with the tariffs coming, with Trump talking about that being tariffs, I can't imagine the zoo being, that 19.9 is very high compared to 10.3. It's pretty much double what it was before. I don't think that's going to be the case. It'll be really interesting tomorrow when we talk BK traders to see whether or not my outlook is true. And we'll talk more about that tomorrow. Inflation data from Canada. We looked at IV PMI together. We saw how the price component of IV PMI increased. So I think the risk is to the upside for the Canadian inflation data tomorrow. More Fed speak. President Trump is speaking on Tuesday. Always keep an eye out on that. New Zealand PPI numbers are being released. So that's always kind of interesting, but I think it's, not going to move Kiwi that much right before the RBNZ, because everyone would just be laser focused on RBNZ. Markets expecting a 50 basis point rate cut reduction in New Zealand, and guidance, is obviously key. We also have Japanese trade data. Wednesday, we have inflation data from the UK, which should be a little hotter because prices, according to the last PMIs, were hot. We also have some minor housing data from the US, but the focus on Wednesday will be the Fed minutes. And the Fed paused at the last meeting, so I think this is probably going to be more dollar positive than negative because they're going to be justifying their reasons for their pause. Australia jobs report, that is expected to be weaker as well. And I think after the really, really good numbers in the month before, we're probably going to have weaker numbers this month. And then Thursday, we have the Philly Fed survey from the U.S., jobless claims, kind of the usual stuff, more Fed speak, New Zealand trade data, which could be better given the stronger business PMI. We have Australian PMIs, flash PMIs on Thursday, so that'll be interesting for Aussie. But what's great, look at the time. It's being released at 5 o'clock New York time, BK traders. So we trade at 8 o'clock New York time. So we're going to be able to ride that move. Japanese flash PMIs, that'll be interesting. UK retail sales, that'll probably end up being a little softer. Friday is the huge PMI day. We have Eurozone PMI, UK PMI, Australia PMI. These are very important numbers for Eurozone, the UK, and what I really focus on a lot to predict, I guess, guide what future data will be. So those are expected to be mostly stronger for the Eurozone and for the UK. And I'm a little skeptical whether or not that's going to be the case. And then we have retail sales numbers from Canada, given the strong job growth, that could be stronger as well. US flash PMIs usually aren't huge market movers, but when we have nothing going on, sometimes, we'll move the dollar. And then the existing home sales revised, Mitch, nothing. I think, this morning will be all about the flash PMIs and any kind of residual risk on, risk off flows. So now let's take a look at the charts. Okay. So taking a look at the charts, this is all old stuff. Euro dollar. So euro dollar, this is a daily chart of the euro dollar. And you can see we had a very nice run last week. We're pulling back a little bit. I am skeptical of the zoo tomorrow. And so I think that, that's could end up being a little weaker. We'll have to see. But I think zoo could end up being a little weaker, dragging euro down towards maybe 104. I'm also bearish dollars this week, but really not, it's more a flow view, and then we'll see. So this chart looks like there's a mini double top here. I think from my perspective, euro could pull down to 104, maybe stabilize around this level, and then we'll have to see how, and just hang tight around there. This might not be a huge trading week. Pound, I'm looking for mostly weaker data. I think we'll have probably a deeper correction in pound, maybe even down to 124. Dollar Swiss is already below the 50-day SMA. This is the first time we've come below the 50-day SMA since October of last year. I'm bearish dollars. So I think that, and we've got a 5 SMA, 20 SMA cross, which our BK traders know that we'd like to watch. And so I think dollar Swiss is going to come down to this 89 cents level, maybe even 88.50. Dollar yen already pulling back, also, below all of the major moving averages. They have what I call moving average clearance. And if we bring in our fibs, we will see we're right around support here, but below there, there's a little bit of support at the swing low here, 150.92. But below there, we could get down to 149.25. There are levels like 150.92, 150 round number that people are going to focus on. But looks like to me, unless we have some sort of correction that holds this, that it wants to test the bottom of this. Aussie dollar rallying. We've got the RBA rate decision. The guidance is key. Obviously, nothing's going to happen, I think, before the RBA tonight. And then depending on how RBA goes, it can either completely reverse this chart and crash lower as the beginning of the rate cut cycle begins, or they tell us, they're doing one, but they're not sure when the next is going to come. We'll have to see. I'm not going to make a view on that until after RBA. Kiwi, similar type of outlook, where it's rallying. It's above a lot of the major moving averages. From a moving average clearance perspective, it looks like we can get up to there, but RBNZ is really going to decide all of that. And I'm more of a positive bias than neutral bias, but like I said, 50 basis points is a big rate cut if they actually deliver that. Dollar CAD is just kind of hanging tight. I'm more bullish CAD than bearish because of the CPI, because of retail sales. But I think, it's stabilizing. I think, we could test this level here and maybe even, go beyond there. We'll have to see. And And then, for gold, I'll let Boris touch more on gold, but definitely looks like it's rolling over a little bit. We're below the 5 SMA on a closing basis. If we drop below this level on a closing basis, 28.78, which is not that far from current levels, I think that will mark a much more deeper correction towards this level here. All right. Any questions or anything else you want me to look at? Let's see. I think any questions? Boris, you want to come on, say hello?
Hey guys, how are you? I'm a little bit under the weather. As you can see, my whole right face is totally swollen up. So I am going to have to go to the doctor after this. But I'm going to share my screen with you a second. Just 1 second.
How's the tooth, Boris? Not to get too personal.
That's the tooth, baby.
Poor baby.
It's the tooth. I held up.
I'm going to embarrass Boris here. And because we're all having fun, right? It's Monday. Boris, he's going to be so embarrassed. He tried to chat GPT his solution for his tooth and to tell him how whether it's bad or not. And I found that very amusing. What did chat GPT tell you?
I don't think that the dentist is going to. The only thing a dentist is going to do is give me give me some antibiotics, which is what I really need at this point because it's definitely got much more infected. I don't think ChatGPT was wrong. I just have clearly an infected gum. It's just that I thought I was going to be able to gut it out myself, being the guy that I am. Let me just hang it out. And it was doing really well this weekend. And then like last night, it just I had no sleep last night. So this is why I look like, Mike Tyson punched me today. But hopefully we're going to get a little antibiotics and I'll be okay. The good part is I did a little bit of coding while I was not delirious this weekend. So I cleaned up one last thing for the BK scalper. See, Kay, we haven't. This is how I get away with not paying Kathy the $1,000 because I said, I'm not going to do a new version. So I basically go 1.7.5.1. So we are no longer creating new versions. We're just going more decimal points. But this really is, I think, like one of the finer decimal points of contention. The cool thing is that I actually, if
you don't mind, so I just want to answer some questions here because then I'm going to jump off and turn it completely over to you. Okay. So how do I get your indicator to trade daily? I will share with you the link to get our indicator.
Wait, do you want the link for the membership?
Yeah, if you don't mind.
Okay.
And then one question about Swiss yen. Swiss yen has fallen quite a bit. I'm going to awkwardly show you my screen again. Oops, I stopped my cam instead. I'm gonna share my screen. I only have one window I'm going on right now. Okay, so Swiss yen, we're pulling back. This is a really ugly engulfing candle. I think that it definitely wants to drop down to here. Stock.
Is that dollar weakness? You think that's a dollar weakness trade?
For me, it's a risk off trade. Okay. But I also think that it's definitely a dollar yen weakness or yen strength trade right now.
Right.
And because I'm generally bearish, I think the FOMC minutes could be bullish dollars, but at the end of the day, I'm still bearish because I think that data has weakened. I think NFPs are going to weaker. But this chart in general, if we ignore fundamentals, we're below all of the major moving averages. It's an ugly engulfing channel. This chart looks like to me it wants to get to 166.
So this is a really interesting point that Kay's talking about risk off. Because, I always say I never trade my opinion. I only trade the chart. But I will say I'm thinking right now, there is not a small chance. Like I think there's a reasonable chance we could have a major flush in the equity markets this month. If you think about this, we're coming into a very, very high valuation territory, 21, 22 times forward earnings. We're running now into massive amounts, I think, of both geopolitical and economic risks. Like the whole tariff story, while it was cute at the beginning, now it might become an actual economic drag everywhere because it's going to create frictions in global trade, which is a very, very important component to most of the U.S. corporations are multinational. Remember that. And then the third thing I think is interesting is, as Kathy was saying, a lot of government jobs are going away. Those are incredibly lucrative income-paying jobs. Now, however you feel about it, you think it's a waste of money, may very well be, but
it sounds like you've got a 5 reasons why the market could crash video short, Boris.
I do. And I was thinking today, actually, that, it's not a bad idea to buy some put spreads into the end of March. Worst thing happens, we blow up a couple of $1,000 on spec, but if this works, this could be a 10-to-1 type of a trade. So I think it's it's definitely an interesting video idea. And I'm
Sure.
I don't like I don't like to cry chicken little, but I think the combination of things at this point really, and the very fact that the market is so incredibly lackadaisical. I mean, you look at NASDAQ right now. Look at NASDAQ. We're at 22.2. Like nobody thinks that the market is going down. We're so complacent right now, and that's usually at times when you get the most kind of brutal body check in the market. So definitely worthwhile, and I think it's interesting the case that the currency market, sometimes the currencies, especially Swissy and Swissy yen, can be a very, very canary in the coal mine type of an indicator as to where risk might be going. So interesting to note that.
All right. I am going to bid everyone goodbye and just let Boris run the show right now. And for BK traders, I will see you tomorrow. And like I said, thinking it through, with RBA coming out tonight, I think we're not going to trade tonight, BK traders, because tonight is like a Sunday because of the holiday in the US. And then we love to trade Aussie Kiwi, which is going to be on pause until the 10:30 number. So there's no point getting in. So then I will see you guys Tuesday morning for trading.
Okay.
All right. Enjoy.
Awesome. Thank you, Kay. Enjoy the sunshine. Have fun. All right, guys. So there's no really trading going on today. I did a little bit of scalping today. I'm like at where am I? Where's my thing? Why is this not showing up? Oh, here we go. I'm at a little bit above 156, trying to get to 157. Remember, I need to get to 159 to get this thing funded. So we're getting relatively close. We'll see how it goes this week. But what I wanted to just take a few minutes, since we have some time today, is I redid the indicator just one more time. For those of you who want the indicator, obviously hit this link over here for subscription. Either way, you can subscribe to us as a member, or you can subscribe to us. Yesterday, a lot of people came to join my academy yesterday to get funded to become funded traders. This is an all-in-one package where you get all of our indicators, plus you get coaching as well. So I put up both of those links. And of course, get some Apex accounts before they go away. The 80% discount is really going to, you're going to be very, very sorry if you don't get it. So go get a couple of accounts right now, because that's the easiest way to make sure that you can get funded very, very cheaply. But here's some thoughts I have for you. So I kind of took a second look at the whole structure of what we're doing. And remember, what we are doing, let me go like in just replay mode to kind of show you. We were doing basically, hey, the green signals are strong signals, the white signals are the intermediate type of signals, right? So one of the things that I did in my new version of my indicator in terms of trend is I said, filter out and show only strong trend signals. If I unclick this, you'll see all the white signals as well. You see all the white check marks, right? And I realized that less is more. Less is more. Less signals, but cleaner, crisper signals is more. Everything that we've had in this indicator is still possible to have there, but if we can eliminate it just by user-defined versions, which is what I just given you, you can have less signals. Less signals means the green signals are good, the red signals are good. Not, of course, obviously today, this one actually worked. This was a short that worked it alongside, and actually this long. I think I was in this long. Yeah, I was in this long, and it managed to survive the stop. And actually, if you go forward, it TP'd. I'm trying to remember which one it was. No, I think this was this one I took, and this one TP'd up. So the point being is the signals are excellent. But here's the thought that I had that's going to, I think, make it much easier for everybody to trade my scalping signals. If you notice something interesting is I'm trading right now the 2-minute chart. We were trading the 1-minute chart. And while the 1-minute chart is very exciting, it also generated tons more signals, some of which were much more noise. So a 2-minute chart does two things. It gives you more time to consider the setup because you have 2 minutes instead of 1 minute as it starts to trans. And it also gives you, I think, more interesting, cleaner ideas. So my first suggestion is let's go to the 2-minute chart. Let's trade the 2-minute chart. Let's trade only the colored trend signals. Let's minimize our our trade ideas to what presumably should be the best trade ideas in the space. And then the final thing I thought about is, yes, when we're trading, let me just see if I have any signals here. Okay, yes, when we're trading, obviously the candle high or the candle low, the candle high if it's a sell, candle low if it's a buy, are the most natural stops and targets, right? And one of my arguments was like, we should be using organic stops and targets. But the drawback of using organic stops and targets is that on every single trade setup, the stop and target is different. And unless you are very, very, very focused, advanced, and actually capable of adjusting all of the parameters, it's very taxing. Even for me, it was very, very taxing to try to run just organic stops and targets. So a shortcut that kind of covers 90% of all cases, in my opinion, is to do the following. It's a very simple shortcut. To simply use a 1-to-2 risk-reward ratio, use a $2 stop on gold. So using whatever you're entering, it's a $2 stop with a $1 target, a 10-point stop on NASDAQ with a 5-point target, and a $2 stop with a 1-point target on S&P. And if you are trading, the strong continuity moves, like here's a good example. This is a red candle that was over here, right? A signal over here, 9095, right? If you sell it over here, your stop is 1105. So your stop is over here and your target is 805. So you short over here, +1, you're done. You're done. Now, what's happening, and this is for those of you who are more advanced, if you're looking for a reverse signal, this is a very, very important point. This is the most recent candle. This is the latest red sell point. If the price closes above here, then you have a reasonable reverse signal and you can go long. And again, same idea, just 2-point stop, 1-point target. Just using less mental energy, even if it's not the perfect stop and the perfect target, even if it's not the quite correct risk-reward ratios, it's better to use a shorthand that's easy to manage because you're going to be doing lots and lots of trades than having to constantly calculate on the fly what is each individual risk, what is each individual reward, how much size should I do? All those things become very, very complicated. This way, it's just sort of very simple. It's cookie cutter trade all across the board. 1-to-2, $2, 5-10, 1-2, and generally you're going to be quite okay. I've been doing this, all evening long, and you can see, nice and quietly up to $300 in profit. I started around 256, and today I'm like at 256, 300. So now, like for example, we're looking right now. This is a 2-minute candle, right? Look at this move here. Let's take it. I mean, it's going to work. It's going to work. It's not going to work. It's not going to work. Big a move. So this is a $2 target, $1 stop, right over here. This is a reversal move. This is not a trend move, but I'm okay with it, with trading a reversal move here on the U.S. Open. Let's see if it does anything for me. The only thing I'll do occasionally here is once I'm in this, and this is already a preset stop and target. If I'm like kind of today, I'm sort of playing around. I may just simply move this very, very tight and see if it can just sweep itself up. See if I can sweep myself up a little higher, maybe. Or maybe I'm just going to take it out at profit. But whatever it is, when you do these kind of presets with a 1-2, it makes it much, much easier to run the trade and take the signals. Now this is a reversal signal. It's not a pure trend signal, but it's not a bad one. I'm willing to play it. Let's see if it pops me over, pops me up. Come on, pop me up, pop me up, pop me up. Now, where's my trade of 8? All right, so and I could got the full point, but I got to go to the dentist. I didn't want to screw around with this thing, and that puts me above into the 300s, nice and clean, right? Look at that, just like $50 a second is where I want to be. nice and clean. Indicator works beautifully. Stops and targets are super simple. 2-minute time frame gives you plenty of room to consider and adjust your stops. It's an easier, more refined, cleaner way of trading. So we're going to do this tomorrow. Hopefully I'll be, fully 100% or at least 80%. I'll be with you guys as usual, 9:30. In the meantime, I'll leave you with all of this. Any questions, feel free to ask me, but here are all the links. Go knock them dead. Actually, don't knock them dead. Today is a dead day, so don't trade today. But have fun with the, with the new version of the indicator. Any final questions from you guys? Anything you guys want to ask me? I'm happy to answer. Yes, no? Everybody good? Okay. So then I'm going to go try to deal with my face. Everybody have a good day. It's a holiday. Just relax. Tomorrow will be another day. We'll have a full week worth of trading. I think this week will be a little bit quiet. But again, I do think that we may be building up to a risk-off trade here for a whole bunch of reasons. And it's not a bad idea to kind of orient yourself that way. Okay. All right, guys. Thanks so much. Everybody enjoy. I'll see everybody tomorrow. Take care.